Welcome to TradeTheNBI.com. This is John. This report is for the 19th of March. And we can see we're starting down just fractionally. Again, we've been holding right on this ABM, still within weakness, and then we broke a little further on this with rising shorts on the DOC here. We've still had a continued drop of the shakeout. So that revisited, talked about potentially to the green ABM, still viable and still puts us within range. We still haven't completely taken out the move of this giant yellow bar right here. The low on that one is down to 27.35. So a bit of ways more to go even from where we're at. And it's just the time of the month. There's just no real impetus. Now you can see that we've already passed it on the NQ. So that's that equalization I talked about because the NQ was further ahead of the S&P. So we're starting to get that balancing taking place, which is something we've been looking for. It's nice to have the markets in sync. They don't always have to be similar valued, but when there's a disparity like that, there's usually a return to mean and an equilibrium. And of course, more pressure because of the slight euro decline, because that obviously has a marginal impact, but nonetheless an impact still well outside the 120 range that the EU had originally called for, and well above that peak of the 116, 113 range that was the original. So there's been a flight to quality here for bonds still. I mean, how can you say this is anything but range bound underneath that 120? I still remain viewing as a short version. Anything above could certainly be long. We do have positive shakeout here, so there's been a lot of interest as the market has gone into some turbulence. With the fact that we're not seeing massive inflation, though, it's really hard to gauge based on the way the government does it. This is why we look at oil. This is why we look at gold prices, because we get a better idea of where the real inflation is ahead of time. You can also start to see it in some of the smaller product things, but the gold move as well as oil certainly has a bigger impact. And you can see we're not too far off the highs from oil. It started its move back up again because, again, we're still seeing strong growth rates in that. Gold hasn't really moved much because we're not looking at a situation where it looks like they're going to be hiking rates all of a sudden, especially after this claim of massive GDP drop. We'll see if that's true or if it was just weather-related situation because it was winter, still is winter, depending on where you are. There's even more wintry conditions. So you can see we've come right back down to the bottom levels from Friday. We're just slightly below, made a new one, tested out those lows. And that's where the lows were right there. So we just peaked it in pre-market here. And it was a pretty decent run, but you can see, so, I had a question about whether or not, the steel coming down below like this is good enough for what I would call a reset. And it's like, no, really, I love to see it when it gets all the way below the negative 13, because what you're doing is, in some of these cases, you're looking for strong signals. So this is a strong move below, but it comes at a point where short-term buyers have already used most of their load in order to try and turn things, and you never got the corresponding orange. And so the move, while it still happened, was tiny, and then it caved to lower, did the same thing, now produced a better signal the second time around above the 23%, and fine, it got to the 50%, but again, there was no reset, so you weren't expecting it to last long. And literally, you can call the end of it, right, when you get to this point where the steel dips below the cyan. That is the end of it, and then it's just a matter of you can use that Fibonacci level below the 50 and move to a short signal on there, and sure enough, that was good all the way through. And then you could just literally trail using that 50% as it begins. Now, that's a little more conservative to utilize that because it's going to take longer. Fine, if you break two zones, you can move up to another zone. There are a variety of different things. That's just a question of your risk management and changes in the readings. And in this particular case, while we got a relative buy configuration, you'll notice, again, no steel reset. It's kind of caught in the middle of nowhere. It didn't do anything. And sure enough, it just caved back over. Tried to do it again. The only problem was lower readings for the red DOC. So talk about that inversion. Usually you look for a higher one. Likewise, right here, this one ended up being lower. Reset gave the pump, but can sustain it. So you can start to see some of these relationships because it becomes relative to strength issues. And if you're going to trade in this kind of a range, you know you're going to get a lot of muck, because when you're up at that zero line is when you get these significant moves, is when you start to get a little bit more dramatic signals. And that's just worth weighing when it comes to both risk analysis and how much exposure you're putting in, and whether you're looking for broader moves or shorter ones. So just worth noting it. Keep this one short and sweet. There's really not a whole lot because of where we are in the month cycle. We're probably going to get more as we move into the week. I think potentially, we're just looking to see if there's a bias that develops economically that indicates that we're going to see some change in what the perception is. Otherwise, we're just going to move along back and forth along these ranges, and that's fine. It's still pretty decent ATRs. I mean, these moves are pretty significant number-wise, percentage-wise, not so much. So that's always something to bear in mind. As always, though, trade well, and I will continue to post things. It was a crazy weekend with Isabella's birthday and that, but I think we're back to normal. So that's a welcome relief. And you can see we're getting a nice press down here on the ES as we're speaking. So I would imagine that this is going to trail down a little bit more, and then we're going to get a pop back up prior to the open, and we may even revisit those lows. Exactly the opposite of what happens when we do it at the peak. Similar concept. They love to do the same thing. They just stop hunting through here. We'll talk again later. Trade well.